start with this. If you thought cyber currency was fading, think again. Bitcoin has been setting record highs. It actually hit $69,000 about a week ago. And I read an article that said investing in digital assets is not going away, and it should actually be considered by financial advisors. So, Nolan, I have to ask, does cryptocurrency belong in a retirement portfolio? And if so, how much?
Well, when you think about how much cryptocurrency should I have in my portfolio, it really kind of depends upon your overall appetite or level of comfort with risk. I would consider a cryptocurrency to be a 9 out of 10 level risk, which means it's going to have a lot of volatility, but, also a lot of opportunity. And, maybe if I backed up a minute, shared a story with you, for those of you who've been listening, you may know in the past that I've shared a little bit that my oldest son, Andrew, he's been actively involved in cryptocurrency probably a little over a year now. What he did is he had got a graphics card, and he has these graphics cards set up as ultimately supercomputers. And what they're doing is they're performing a lot of the transactions for some of the digital assets and currency that's out there. And by doing so, what he does is he gets paid a little bit of some income by having these computers run those cryptocurrencies. It's called digital mining. Can be, a great way for a 20-year-old as Andrew to make some passive income. But what he's also been doing is he's been taking that passive income, and he's also been using that to go out and purchase the digital currencies that are available out there. In this example, Bitcoin being, one of the largest known, the biggest one that set that record, as you pointed out, at $69,000 a coin back in March of 2024. But there are other cryptocurrencies that are out there, Ethereum, there's quite a few different ones to pick from. And so when you look at this, I would say that there absolutely is an opportunity for people to get involved in the cryptocurrency in one capacity or another. So when we look at this, if you're wondering, should I have a cryptocurrency, digital assets in my portfolio, or companies who benefit from that, and if your financial advisor is not talking to you about it, I would say we should have a conversation and talk about why maybe you should have anywhere from 1% to 3%, again, dependent upon what your level is and comfort level is of risk, invested in some type of digital asset or company that would benefit that. Because I do think that it can now be a place in the portfolio, because what you had is you had the Securities and Exchange Commission gave approval to cryptocurrency exchange-traded funds by a major of the financial houses in January of 2024. And so what that should do is that should make financial advisors and their firm willing to speak more about investing in crypto shortly. And if we look at other professionals that are out there, like Rick Edelman as an example, he predicts that independent financial professionals are going to invest, roughly $150 billion in spot Bitcoin ETFs over the next 2 to 3 years. And so if we look at the markets and we think about the markets, the stock and bond market are an all-day, everyday auction when they're open. So the more people to show up to buy, the higher the price goes, and the more people show up to sell, the lower the price goes. So now that financial professionals like my firm and other firms have the ability to start talking about these cryptocurrency ETFs, you could have another big wave of buyers moving into the market like Rick Edelman is predicting. You also have Jeffrey Jansen. He's a wealth advisor. Also talks about, again, somewhere having that 1% to 3% type allocation in a portfolio. Talking about the philosophy of it's a good idea to walk before you run, getting prepared mentally, again, for some of the volatility. If I look at Andrew's experiences, in the early on part of his crypto mining, things ultimately were going great. If I looked at the year of 2020, you had a lot of the crypto prices were, dramatically dropping in prices. And now, what we see here in the overall past 6 to 8 or 9 months, crypto prices have also dramatically come back up. So it is, somewhat of that big roller coaster ride, which is why, again, you've got to be careful with the amount that you put inside of it. Again, big payoff potential, but big risk associated with it. Where you can also seek some other opportunities if you're not looking at actually owning some of the ETFs that are cryptocurrency is you want to look at some of the companies that are out there, like the semiconductors. So, with Andrew and his computers, he's got 36 semiconductor that are performing these transactions in as supercomputers. Look at the things that are like the publicly traded companies. So there's some platforms out there of companies that are publicly traded that allow you to exchange these currencies. Those could be ones that you could take a look at. And again, the SEC approval list of the ETFs that now allow you to invest in those digital assets is another area. When you look at some of these publicly traded ETFs, you'd want to pay attention to understanding exactly what it is that they're investing into. So some companies are invested into not the digital assets. Some companies are invested into the miners or the graphic card makers or, the people that are behind the scenes. Some of these newer ETFs, now that they're allowed to, are going to actually get involved in the cryptocurrency. Some of the strategies will diversify your money among multiple different currencies. So if you didn't want to have all of your money in one digital asset, you maybe wanted to diversify it. That can be one of the advantages of an ETF. It gets you kind of that diversification that's outside of there. So I would say, folks, bottom line is to know how much you should invest in your portfolio. It's, first of all, to get educated. If you have heard maybe a cocktail discussion about cryptocurrency and you wanted to know, how does this apply to my situation? What really is crypto? What are the different options that are available to me in your portfolio? I would say give our office a call. We can sit down, spend some time, educate you a little bit about it, and then show you the ins and outs and stress test the portfolio. So if you want to find out how this can be part of your portfolio, give us a call at the office. We're happy to walk you through that approach. But I would say, yes, it's worth at least becoming educated about it. And so even if it's not right for you, you know the pros and cons of the strategy that was, again, just recently approved by the Securities and Exchange Commission as something that ETFs can be offered by most of the financial houses in my industry.
As Nolan said earlier, this isn't a silver bullet thing where you need to put all of your money in it. Not by a long shot. There is a good bit of risk still involved, but it could be a valuable part of your retirement strategy, your investment portfolio. So to get more education about it, to then see how it could work for you, just schedule a time to speak with the team at America's Retirement Headquarters. You can give a call, 419-794-3030, or you can always go to the website as well, schedule a time, and find out more about the team at arhq.com.